We had Sunday futures open with a rally. It was a pretty big rally, but it wasn't sustainable, and we ended up selling off on Monday. Now, the VIX was predicting that today would be an up day. I told you, we start going parabolic on the VIX, you throw all that out the window, and the VIX surged up by 13% today. We got Nvidia earnings, which will be after the closing bell on Wednesday. After the closing bell on Wednesday, that's going to be the main attraction this week. Our other important earnings this week, we have Target before the market opens Wednesday. Before Thursday, we have Walmart. But Nvidia is going to be the main attraction. Now, we did get the Empire manufacturing data today. It came in better than expected. But in addition to Nvidia earnings after the bell on Wednesday, during the market session on Wednesday, November 19th, we'll get the FOMC minutes from the last meeting. Remember, this is the meeting where Powell pretty much tried to cancel the December rate cut. There could be some negative reaction to that. Now, again, I'm telling you, the Fed's not going to stop cutting rates. I think they'll still do a quarter-point cut in December. In January, I think you're going to get jumbo cuts. I think they'll have an emergency meeting. If I'm wrong about that, I think it'll be the first quarter, but I have the guts to tell you exactly what I think. I think we're going to be in recession by December or January. I think they're going to be doing jumbo cuts by January. I think we'll get a significant drop. Bitcoin's already down over 27% now since I called the day of the top for Bitcoin. S&P and NASDAQ went a little higher, and then they peaked a couple weeks later. Now they're going to follow Bitcoin's lead and play catch up. In addition to the Fed minutes and Nvidia earnings there on Wednesday, we're going to get on Thursday, we're going to get the first jobs report that we've had since the government has reopened. I do expect going forward, going into the recession just before it or as it starts, you're going to see negative numbers. So we might see that happen. We know that during the government shutdown, that's going to impact GDP in the fourth quarter. We've already seen deterioration in the labor market. Do we start seeing negative numbers? I'm just gonna flash some charts across the screen so you can see some of my indicators. Again, momentum has flipped back to bearish. You tried to flip to bullish for one day and it flipped right back to bearish. You have a bearish reversal of conditions. Now you're closing below the 50. Got a red bar possibly confirming a lower high if oscillator goes negative. Again, stochastic rolling over. MACD headed towards the center line. I'll be watching this closely here to see if we start heading down towards the 200 period. This is the S&P daily. We're starting the week taking out the 10-week moving average. We'll see if we get a bearish reversal of conditions by the end of the week. Our third red bar on the oscillator, the MACD is rolling over. Stochastic, as I pointed out, already broke the 80 level. So again, that's weakness. We have the bearish divergences in the monthly time frame. I showed you that on Sunday. I'll be watching for a bearish reversal of conditions here in the weekly time frame. Same thing for the NASDAQ. Again, the MACDs are rolling over in the weekly time frame. Stochastics have broke 80. We're taking out the 10-week moving average. If we close below it, we take out the lower boundary of the cloud, you get a bearish reversal of conditions here in the weekly time frame like we did right after we had the February top over here. Weekly chart of the NASDAQ. Below the 50, we are getting a green bar today on the Awesome Oscillator of a bearish reversal of conditions. We'll be watching to see what happens with Nvidia, with NASDAQ, with Nvidia earnings this week. Run through these fast so you can see them. Again, we still have a bearish signal with our trending signals here. S&P daily here. The counter trend and the lower high signals remain bearish. Same thing for the NASDAQ, but I'll still be watching that gap overhead that I'm talking about in this video with Nvidia earnings this week. Signals remain bearish on NASDAQ. Signals remain bearish on the S&P. And, you know, we're getting these MACDs roll over in the weekly time frame this week on the Dow, on the S&P, on the NASDAQ. You got to wonder what's going to happen with Nvidia earnings. And even if we rally with Nvidia earnings, do we sell off with the jobs report? Do we get a negative number or a bad jobs report? Or do the Fed minutes cause concern for the market? NASDAQ daily charts, trending signals still bearish here. Rallied up, got a lower high. The signal remained bearish. We'll see if it remains that way with Nvidia, or do we try to fill that gap? And here, S&P signals had turned briefly bullish, flipping right back to bearish today with the sell-off. So again, can remain that way like we had happen over here. You can get this bigger sell-off. This was 21%. We're headed back down to the April low. And again, I think you've got that possible head and shoulders, at least moving towards the trend line of the channel as I've shown you in the weekly time frame, show you at the end of this video. I told you we might have something where it turns bullish and then reverts right back to bearish immediately. That's what we've seen now here with this signal turning back to bearish today. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. If you could take a moment to do that, I would really appreciate it. Most channels on YouTube, sponsors, they contact me all the time. I turn those offers down. I don't want to sell you anything. Send you to some website that wants to rip you off or charge you triple commissions for gold. That's the kind of shady deals. I don't want anything to do with that. You could take a moment. Just partner with me. Follow the link below to take you to a secured site. You can donate any amount you want to make it a recurring donation. Just take a moment to help out. I would really appreciate it. I thank you for your consideration for that. The VIX surging by nearly 13% today. It was up more than that at the highs. Again, we're bouncing. We pull back to the 200 period and we're bouncing above it. Eventually, this 50 is going to get back above the 200. Again, we saw volatility begin to surge here. We pulled back to the 50 and now we're bouncing off of it and getting back above the 200 after getting the topping tail at the 200. And again, people keep dismissing the VIX. It's broken. This time it's different. VIX is warning, just like it warned back at the February top. Again, you saw the VIX MACD firm up. You saw the breakout of the wedge. Well, the 50 and volatility surged here and here. Bouncing, going back to the 254 chest. So again, we're probably seeing the breakout here, this surge in volatility, and now this pullback. You're likely to get a bigger surge in volatility. And look at the MACD, it's firmed up. Last week they were telling us, oh, how bullish everything is. The Dow's moving to new highs. And yet, the distribution in the tech sector, and again, her drinking the Kool-Aid, oblivious that volatility is on the rise. Again, when you saw this happen, you saw the S&P in the lower window here drop 21%. You're going to get a bigger drop than 21%. I expect a 26 to 30% drop, maybe even more if we take out the April low, but that's what I expect to kick off the bear market, which, again, I believe we've topped. I believe we're selling off right now to kick off the bear market. Stochastic got a higher low with that pullback to the 50 and is surging higher, holding above the 50 level. What I'll be watching for is, do we hold above the 50? Do we hold above the 200 period? And again, the VIX had predicted we get a rally that we had 3 trading sessions ago. It didn't play out. And again, it doesn't play. When you start seeing the VIX go parabolic, you throw all of that stuff out the window. The short-term predictions on the VIX don't work when it starts going parabolic and when volatility sharply increases. I was basing that on the historical data. There was still a 15% chance we didn't get an up day. It didn't play out. A lot of the calls on the VIX have played out recently. Like I said, you start seeing this thing start go parabolic, then all bets are off. We're just going to sharp decline in the market, and it is going to happen. And when we start seeing a really sharp decline in the market, we're going to be shocked because they've been lulled into a false sense of security. The Dow sell off. Remember the people telling us, the experts and the herd and all over social media, oh, the Dow's breaking out and the S&P and the NASDAQ, they're going to follow. Remember all that nonsense? I told you the Dow was slamming into major resistance, and if you were buying the breakout nonsense, you were likely buying the top. The Dow is reversing hard. Today it was down 1.18%, down 557 points. S&P was down almost 1%. It was down more than 1%, more than 1.25% at the lows there, down 61, almost 62 points, 66.72. NASDAQ down 0.84%. NASDAQ Composite, the Russell down nearly 2% today. The Russell taking a beating. And again, the VIX was up about 13%. The headline, the Dow closes down 550 points, dragged down by Nvidia and tech shares. Remember I told you the Dow was going up to get the headline, oh, the Dow's making new highs. We've been seeing the distribution, the AI stocks and the tech sector. It's being manipulated so they can get those headlines, rally the NASDAQ back up higher, get a lower high, and have more distribution take place. That's why it was done. Kool-Aid drinkers, the herd, convinced the Dow was breaking out and this is just going to allow the market to continue to go higher. Complete opposite is happening. Remember I told you they were going, it's a breakout! And it was a fake out for the herd drinking the Kool-Aid. Where are all these experts? Where are all these experts and all these people, these social media influencers here? How this was this massive breakout. Again, we reversed and we gave it all back. The rally that we've had last week has now been completely given back. I talked about this divergence in the daily time frame. I talked about the divergence on the MACD and the larger one going back into the summer here. And now we're seeing this play out and begin to sell off. We're down at a closing below the 50-period moving average. The 10 is now touching the 20-period moving average to get a crossover, and we saw that with NASDAQ and S&P last week. First saw it with the Russell leading the charge lower. The Russell was down 2%, by the way, today, as I said. Dow was down 1.18% for the week. We got that topping tail last week. Remember, we had the rally, and it's a breakout, and I told you it's forming a topping tail off of the upper channel of resistance. See if we get the confirmation bar this week. Remember, we still have this Dow theory sell signal with the transports making a lower high from the peak over here in late 2024. The Dow made a higher high. That's what you see at market tops. You see the Dow theory sell signals where the transports don't make new highs, but the Dow does, or vice versa. One fails to confirm the other. That's the principle of confirmation in Dow. We've got Nvidia earnings after the bell on Wednesday. Again, it's had this slight overthrow to the upper channel. This is all the data that we have on Nvidia. And I told you, I think we have something like what we had over here. We hit this trend line for several years, a couple of years here, and breached it, went the other direction. I think you have the same thing here where you breached it, you went the other direction. But you still have a really nice looking channel, and you've got this broadening formation in the upper boundary of this channel. Just like the NASDAQ. NASDAQ's doing what Nvidia does. The market follows Nvidia, and if we sell off of this trend line, we may go back up and fill the gap. The daily time frame, they're likely going to turn off of this trend line longer term. Broadening formation in the weekly time frame, I think it will play out. I think you'll get a significant sell-off down to the lower boundary of the broadening formation or down to the April low. Probably get a partial rise. That's what broadening formations do. They usually sell off, get a partial rise, and then collapse. Still have a gap up here that we may fill. Let me show that to you on the daily chart, and then we'll move on from Nvidia. Nvidia was down 1.88% today. We got the 10 crossing the 20-period moving average like NASDAQ. We rallied back up. This was the low that we had from that Friday just over a week ago. We rallied back up to the 10. We rallied back up to the cloud, and we got rejection there. And now we're coming back down here towards these lows. NASDAQ actually took out those lows at early November low. But the thing I'm watching is the gaps. And we don't have to fill the gaps, but you very well could come back and try to fill these gaps up here with NASDAQ and Nvidia. We try to rally surrounding earnings. Now remember, we're going to get the Fed minutes. Then we're the Fed. Oh, we're canceling the December cut. Market peaked that day. And again, I told you we were likely going to peak with the Fed that week on October 29th, 2025. Nvidia peaked at that same time, but you still have this gap right here that may or may not get filled. We don't know. We also have a gap directly overhead right here. And today we gapped down from the close there on Friday. So you got some gaps to be watching on Nvidia and on the NASDAQ. I think Nvidia is going to turn off of that weekly trend line over time here. We still may come back up and try to fill this gap right here. So it's just something worth paying attention to with Nvidia earnings this week. Even if Nvidia rallies, remember, we've seen Nvidia rally before with earnings and then reverse hard. And when it's beat earnings, again, sometimes earnings beat, but it's not good enough because already been priced into Nvidia. Regardless, we're up near resistance, and Nvidia is eventually going to crash along with the rest of the market. It's not going to be immune to the bear market. We got the Russell coming down to major support from the 2021 top right here. We're hitting a horizontal support level. The MACDs rolled over here in the weekly time frame. We have this channel. We've turned off of that. I told you that that's where I thought the top was with the Russell. It got a lower high and diverged with the S&P 500 in the daily time frame. So again, Russell starting the week off with a sharp decline of 2%. Russell's been leading the market lower. The Russell's been tanking, and the rest of the market has been following. But we've had several weeks down now here, and again, I'll be watching this level of support with great interest on the Russell. That beautiful negative divergence on the RSI here in the weekly time frame, and the MACD validating that with the rollover. Russell slammed into the trend lines in the weekly time frame, the trend line here in the daily time frame with the rising wedge, the black line you see right there. Peaked right there. I told you I thought it peaked. That's holding so far. We got the lower high diverge with the S&P. We're at the 100 period, the lower end of the cloud. The cloud's starting to turn red, the trending cloud. But the diversions back at the peak did play out on the Russell. MACD's gone negative, but we're becoming very oversold on the Russell. So at some point, you're probably going to try to get a bounce. We're hitting major horizontal support from the 2021 peak, and we're hitting the 100 period moving average here in the cloud. The 10 has crossed the 50. We already had, remember, the 10 had crossed the 20, and the other averages are now following that with the S&P and the NASDAQ last week. Now we're getting it with the Dow. You have the 10 below the 50, so you're going to get this bearish arrangement of the moving averages soon. Even if we bounce with the Russell, a bearish realignment of the 10, the 20, and the 50 moving average, which I call the moving average trio. Now, I talked about the gap up here for Nvidia, and I'm going to be watching that surrounding earnings. We also have a gap overhead for the NASDAQ. That's a gap up here at the just under 26,000 for the NASDAQ, but it's the same thing as Nvidia. It gapped lower. It gapped lower here, right there. So you've got this gap. We've never filled it. Rally back up, we still at gap resistance. So again, I'm watching this gap right here. If we were to rally with Nvidia earnings, then that is a place to be watching. A candle of indecision in the form of a spinning top. We also have some possible bearish Harami patterns. Let me get on the right one right here. The bearish Harami pattern, you have a wide range bar, and then you have an inside day that's red. And again, oftentimes it could be a doji or, you know, a top as we have today. So again, candlesticks mean absolutely nothing unless they get confirmation. So we'd have to continue lower for that to play out. Pattern is present. And again, no guarantee it plays out, but it is present on Nvidia, where you get the inside day, you've got the spinning top, and it's a red bar. The reason why it's still a white bar there is because we closed higher than the open, but it is still a down day, and you still have that potential pattern in the form of a spinning top there with possibly bearish Harami pattern. Nvidia's got it, NASDAQ's got it. And here it is again on NASDAQ. Again, does that mean it's definitely 100% going to play out? No, that's not what it means. It means it could, if it gets confirmation, we could go lower. We have the support level directly here below at our October 10th low. And again, you got this still possible head and shoulders pattern that could be under construction. Come down here, take this level out, and then get a right shoulder. Again, we may attempt to fill this gap if we can recover back above the 50, but we're closing below the 50 right now. And we've got the 10 last week dropping below the 20 period moving average. So again, no guarantee we fill this gap, but it is still possible with the Nvidia earnings this week. If we can see Nvidia rally, that would help NASDAQ for the short term. Still believe NASDAQ is topped. I slammed into major resistance, and I'm watching this horizontal support for a potential head and shoulders pattern setting up. If we take out horizontal support right here, right around the low 24,000 area, you've got your 100 period moving average there as well. So again, something worth paying attention to, this level of support, the 100 period moving average in the daily time frame. Had the rally back up, and again, everybody said, oh, the Dow's making new highs, NASDAQ's going to make new, oh, it's a NASDAQ and S&P. But yet, again, we're seeing the distribution. We're seeing the distribution happen into the rally. And we rolled over at the stochastic, turned up, but rolled right back over. validating a lower high. And on Friday, we did move to a lower low here on the NASDAQ daily chart. NASDAQ 100 down 208 points today, down 0.83%. I'll be watching to see what becomes of this two-day bearish Harami pattern. Does it play out and we confirm it by closing below Friday's low and continue lower? Or is the pattern negated and fails to be confirmed? Still have this massive broadening formation on the NASDAQ. This is a daily chart. We broke down from the trend line. We back tested it. And now closing below the 50-period moving average. So the door's open for a bigger drop if you can remain below the 50-period moving average. But we still have that head and shoulders pattern, as I've talked about. If we try to bounce, directly below, if we try to bounce, then you could sell off and then maybe get a right shoulder with Nvidia. That's possible. But we still have that gap up there that I'm going to be watching. We don't have to fill it, but it's something I'm paying attention to. NASDAQ daily chart here. NASDAQ had broken down from the rising trend line from the April low right here and back tested it. And right now we're getting a close. Now, we didn't do it on Friday, but we're getting it now, a close below the 50-period moving average. If we continue to hold below the 50-period moving average, then a head and shoulders pattern may not set up. If we bounce off the 50, you got a shot at filling that gap with the Nvidia earnings and going back and hitting this trend line right here, filling the gap there. So far, we've broken down from the rising wedge, and we are back testing with that negative divergence on the RSI and the MACD. I'll be watching, does the MACD go negative here on the NASDAQ going forward? If it does, we'll open the door for a bigger drop. During the advance, the MACD is held in positive territory through the advance. Still have this potential head and shoulders pattern if we continue lower and then get a right shoulder. If it's a balanced pattern, then we should not fill that gap. So again, we'll be watching the gap up here very, very closely on NASDAQ with the Nvidia earnings later this week. We may even attempt to rally with Nvidia earnings, but if the jobs report comes in bad, you could sell off with that. See what the market's responsive to what the Fed said, because again, the Fed took a very negative tone towards rate cuts going forward, canceling the December rate cuts. Again, they're not going to cancel nothing, in my opinion. I think by January they'll be doing jumbo cuts. During the week off with the MACD rolling over in the weekly time frame, we're seeing the same thing with the Dow in the weekly time frame and other charts turning off major resistance from our channel from the 2018 and 2020 low here on the NASDAQ. We got that broadening formation. You can see it here in the weekly time frame. The stochastic has rolled over. We talked about that last week. The question really now is, do we try to rally with Nvidia earnings or sell off with Nvidia earnings? Rally with Nvidia earnings, but then sell off with the jobs report or something else. And I'll be watching the gaps on NASDAQ. Starting the week with the MACD rolling over here. You got it with the price oscillator. You got it with the MACD. So again, we'll be watching, do we close the week out with these bearish MACD crosses in the weekly time frame? That's also turned off the channel from the 2022 low, where we got the higher low in early 2023. Warning you about the market breadth indicators that were warning we were going to get a sell-off as we're slamming into major resistance on the S&P 500. The bullish percentage, it dropped into negative territory, validating a top. Turned down, we rose back up and we got a lower high. And this thing, as long as it remains negative, you're likely going to get a much bigger sell-off. Again, very similar to the diversions we had in the 2025 February peak, and it went negative, remained consistently there. The counter trend, we went slightly positive, but again, it was negative. Saw a 21% drop. You're probably going to see something bigger than a 21% drop, but I think you're dropping back here, and I think you've got that potential head and shoulders in play on S&P, on Bitcoin, broadening formation on NASDAQ and Nvidia. It's still in negative territory. It turned down off the 50 level after we got that hanging man candlestick on the S&P that was validated. Again, the stock market's now going to play catch up to Bitcoin. Bitcoin's already dropped more than 27%. Turned off major resistance, just like the market is. S&P trend direction has formed bearish divergence, and the S&P volatility oscillator, if it moves above the signal line, you're going to see a bigger sell-off in the market. It's rising, showing volatility is on the rise right now. S&P rose up, got a lower high, and then we saw that gap lower, another gap lower, and then we rallied back up to the 200 period here in the 5-minute time frame, and now we've gone back and tested this low and taken it out slightly. The 50 and the 50 and the 200 still have the bearish death cross playing out here. The risk is that we continue down towards 65.50 if you continue to see selling pressure. This is the 5-minute chart. We're holding below the 200, and again, when you go down is when you're below the 200. You get back above it and get a counter trend rally. No divergence. Might see divergences develop at lower levels. I argue that the 15-minute chart on the S&P looked very similar. This rising wedge looked very similar to what we had over here at the top. You got a rising wedge, you broke down, you went sideways. You had the rising wedge, you broke down, you went sideways. And then you gapped lower and sold off. Here you turned lower, dropping below the 50 cloud, and they acted as resistance. Here we drop below the 50 in the cloud, and they acted as resistance. 50 dropping below the 200, the 50 dropping below the 200. Now here we rally back up again, get back above the 200 here in the 15-minute time frame. So again, going to be watching to see what happens surrounding this week with the Nvidia earnings, the Fed minutes, and the jobs report. 15-minute chart, and again, the lower high here, the top over here, these divergences. See the bigger picture right here in the 60-minute time frame. The 60-minute time frame, we got that peak, the rising wedge, and then the lower high, another rising wedge, and now again coming down, and we're testing our low from early November. Again, if we go down lower to the October 10th low, you've got the 65.50 area of support. So what I'm watching, we already have the 10 below the 20 period moving average in the daily time frame. I'm watching to see if we're about to get the 50 crossing below the 200 here. Even if we try to rally back towards them, the cloud and the moving averages are resistance. Same thing, if we end up to get a bigger rally this week with Nvidia, you got your gap up here at 68.52. We never did fill the gap at 68.92, and this gap, 68.52, is the same level that we had over here at 68.52. But we never did fill that gap. Watching these gaps if we attempt any kind of rebound, but I'm also watching horizontal support. Will we see the 50 cross below the 200 here in the next day or two? And when you kick off a bear market, usually you get a significant drop. And if we do see that, you've got a shot at a head and shoulders. I think Bitcoin's already doing it. And don't dismiss that we can't sell off on the S&P because, again, it has a positive correlation with Bitcoin. Bitcoin's already lost 27%. The crypto herd are super angry right now that that has happened. I predicted that it would happen. We're hitting my target levels. I don't think the sell-off's over, but you're probably going to get a bounce with Bitcoin. They dismissed the possibility that Bitcoin was entering a bear market and was about to get a significant sell-off. People didn't believe down here that the S&P could rise. Now they don't believe it can fall. Got a similar divergence that we had back over here just before the February sell-off. So we're taking out the 50 now. We'll see if we hold below it or not. If we stay below it, you get the possible head and shoulders and larger head and shoulders. I think you're dropping 26 to 30%, as I keep saying. I think the Fed's going to do emergency cuts. I think it's going to be January. Maybe I'm wrong. Maybe it's later in the first quarter, but I think it's going to happen down here right around January, and I think you're going to see a massive rally back up. I think something's going to happen to cause a significant decline in the market. It could be a combination of catalysts. Taking out the 50 period, NASDAQ did too. We'll see if we remain below those levels or not. We've completed a 5-leg push higher, and I think we're headed down to the April low, and I think we're going to join Bitcoin getting a significant sell-off. And S&P's got that 100 period down here near horizontal support. We're taking out the 50. We're at the lower band. We'll see if we get a bigger decline here. Again, is what I'm looking for is a lower high and a lower low, a lower high and a lower low, taking out this level on a closing basis. S&P is just above this area right here. We've seen a 4.16% sell-off, and we're just above this level right here. And again, I'm going to be looking for that lower high, lower low. You can see here that we confirmed the hanging man candlestick, which is we got a confirmation and a follow through. But we also, that same pattern at the peak right here, watching, does this head and shoulders pattern set up? I talked about the head and shoulders with a possible slanted neckline here with this being a right shoulder. I think it's more likely you come down into this area here and maybe get more horizontal looking or slightly line that's sloping lower maybe or slightly sloping higher. I think you come down closer to this April 10th low or October 10th low. And shoulders still in play here on the daily chart. RSI in the negative region. MACD turning down and moving towards the center line. We'll be watching pring parameter rolling over, forming negative diversions, now confirming a lower high. But this time, it's different. And S&P has turned off in the weekly time frame major resistance to channel from the 2020 low. We've turned off major resistance from the monthly channel going all the way back nearly, really 100 years, the 1929 top and before that leading into it in the 1920s, off of that trend line as well in the monthly time frame. And I believe the S&P's topped, I believe, going down to this trend line or the April low.